The following is a presentation of TFNN. It is now time for the Tiger Technician Hour with your host, Basil Chapman. Call now, toll free at 1-877-927-6648. Internationally at 727-445-1044. Now, Basil Chapman.
Hi everyone, Basil Chapman. This is the Tiger Technicians Hour, the Monday edition, Monday the 30th of March. Another day to go and then we wrap up March. Will there be a new high in March? I don't think so. Anyway, we'll go on with all the news here. Thanks to John and you got Steve and of course Tom's updated 10. Just great programming. I hope I can continue that. We'll go straight into Larry Pesavento after me and programming all the way through. Most importantly, what I want to look at was how were a couple of areas acting today, although for my subscribers over the weekend, I said, good chance it would be in a rally attempt. Certainly this is more than a rally attempt. Dow's up 253 at 17,966. S&P is up almost 20 at 2080. The comp index is up 36 at 4928. You've got gold down 15. Very interesting. At 11, what are we looking at there for gold? 1184. And silver's down 38 cents at 1668. You know, I keep saying that. Period of deflation. You shouldn't expect, unless there's a bank crisis or some kind of a credit type crisis in the international markets. I just don't see any reason why gold should be anything other than bouncing around within this arch formation in the monthly, both the monthly and the weekly charts. There's the monthly right there, and with a good test of that low of November at 11,333, November of 2014, coming up sometime soon. And that's the way it just looks. I don't know what else to say. I always keep getting emails and questions about it. And all I can say is, if I'm correct in saying that the major bull market of gold going to the September, was it 2011 high, is over as a tide in the monthly, then what I'm anticipating is that until we see those for sale or for rent signs on those stores that had gold for sale and gold bought and sold, that sprung up over the last few years, well, many years, until I see those signs, I don't think we're going to get a really major move in gold. I can see good balances. I can see nice trades in certain gold stocks, but believe me, it is tough because not all gold stocks are the same, and not even all the gold indexes are the same. Maybe once I say that, let me just show you. Look, here's gold, GC. This is the, where did it go? Right there. Gold continuous contract went into single leg, a sharp move from the 1140 area all the way to the over 1220. And then what happens is it pulls back, but it pulls back not to the 9-period moving average of 1197. Is that 97.87? 87. Instead, it drops down to where it is now at 1184. And it looks like this is that single leg A up that has a very sharp decline. It could even make an Eiffel Tower back to the lows. But, you know, when you put it together with the dollar, the DXY, and you put it together with dollar's acting just like we thought it would. That it would form some kind of a rectangle formation, try to have a bounce, get into this area here. Now, then all it was setting up was a trading range between maybe 98, 99 on the high side, and maybe 96 to 95 on the low side, with so slightly higher highs, slightly lower highs, slightly lower lows, until it really breaks decisively under 95, with 96.57 being the 9-period moving average, trading right now at 97.82, up 53 cents. I think gold is still, based on the weekly and monthly charts, still holding very well, especially if you put it together with the EUR-USD, the euro currency pair. And the euro currency pair, very interesting. Why? Because it's made an even smaller H pattern in the daily chart, it's barely an H pattern in the weekly chart. Monthly chart has got just trying to form its first candle that says going from highs to lows. When I form a Chapman wave Roman candle, that actually turns out to be a sign of moderate strength, but we should come back and test the wick at some point later on. So that's that whole candle of March with a low of in 1.046 and a high of 1.239. So that 1.1239. And now let me just look at something that's most important to us is bonds. What are bonds doing? Well, there again, see, there's that H pattern in the weekly chart. It says to me that there's a real good chance that bonds, I don't have the bond chart up. I should. It's the beginning of a new week. I'll put it up right now. Recent works, long-term chart, there it is. So this bond chart that shows the 30-year, 10-year, and 5-year yields says that the downtrend remains, lower lows and lower highs, that the bounce that we just had is creating a cluster formation. And in this cluster formation, we're going to have to monitor it really closely to see that at some point over the next 2 to 3 months, we do not get an inverted yield curve. Rather, we just get a yield that is trading in a sideways formation, maybe taking out the 22.26 low in the 30-year, that's 2.226% yield, maybe taking that out, but not all that much, but in fact staying in a trading range, not breaking much above 2.8 if it does rally at all. And it's at 25.45 right now. So, okay. And the other thing that I was looking at, look, WOOD is the iShares Global Timber and Forestry ETF. It is just stuck. It has not managed to break higher or lower. It's just stuck after that peak E top in the weekly chart. But what is interesting is that right there, that the HGX, the Philadelphia Housing Sector Index, look at this, made a high of 236.51 the week of the 20th of March. Then it went to 236.30. So it's made a peak E. Now we've just started the week and we're at 236.22, and 236.52 starts another leg F. I'm sorry, leg F/B to the upside. And what's very important about it is see this dashed line here, which has just been perfect as a repellent, like a yield, more like a stop sign than a yield sign. As this rising wedge comes to the apex, that point of contact between the top and the bottom trend lines that are coming closer and closer together, forming this wedge formation. And that's going to be very important. And I had drawn the fact that there should be some kind of a cup formation. I can now extend that. I can actually say once again, there could be another one, right? Let me get it. There it is. There it is. So right here, we could be looking at yet another cup formation. And that's going to be very interesting. Why? Because if this housing index actually spirals to the upside and takes out that resistance and goes to 240 to 241, that's not much. It's only 6 points higher. That's it today. It's already up 2.87. If it does that, that's a breakout. And that's saying, I'm probably wrong in saying we are in the midst of some kind of a rotational mini recession. Although almost all the work I did over the weekend from the transports to the retail index to many sectors is suggesting that that probably is happening. But using your technique, if you're looking at price performance right now says, hey, look at this. Yields are still low. There is still, here we are, the Dow is still managing to stay within this little mini down channel, making the second U cup formation. It went again back to a sell mode in the daily. Now it's bouncing. Has it negated the sell mode? Well, not really. Stochastic did cross positive this morning, but the MACD is really struggling to cross positive. The histogram is improving. So we'll deal with that as we move along, because the very big resistance is going to be in the 1820 to 120, anywhere around there. If this week we get to that level, I'm going to have to say, hey, This is very interesting. A lot is happening here. Okay, so back to our story. I think we did almost everything we wanted to. Let's see. Let me see questions in the den. Want to comment on RAD? Where is it going? Okay, we'll do that. RAD is Rite Aid. Rite Aid is a stock that, for my subscribers, over the years we've had tremendous success with, and we bought it back again in the low eights just recently. Sort of got away from us, but on the next pullback we bought it. And one of the things I was looking at, Rite Aid was in fact a stock we had once owned below 2 at 1 point something or other, and we held it for ages. We were long one time right there, April of 2013, and had core position plus trading positions, etc. So it did extremely well. Then we got out and just sat back as it came all the way back down, and now we've got back in. So it's broken out, and that says in the weekly chart and monthly chart, that cup formation. Look at this, beautiful cup formation. It's actually what we call a bowl formation, taking all the way from June of 2007 at 674, plunges to 20 cents back in February of 2009, and then climbs to a new high of 8.62, and that was in December? In June of 2014. And then what happens is it pulls back all the way to $4.42, and that was in October of 2014, and now it's climbed all the way back in this cup formation. The MACD is improved, it's just crossed positive, but the stochastic is still lagging a lot. So that says if the stochastic is to get to the 85%, which is normal for a very strong stock, that's going to say this recovery is immense. It's doing fantastic. But if the stochastic's warning us that you've got to be somewhat careful, then the weekly chart in leg D is going to be the signal this week probably to say, hey, you got to raise your stop in at least half the position. It's at 8. It hit 883 this morning. That is a huge gain, very quick gain for us, 10% or something like that, 9%. And now it's trading at 874. So what we've got to be looking at is what exactly happens when the stochastic flattens out at 89%. What happens is the longer it flattens out, you can see from way back in December of 2014, when it flattened out, it just kept climbing higher. I'm hoping that that's going to happen here. Now, a couple of things that I showed my subscribers was, Mark, one of the things that we were looking at was there was a left side, right side, not only a left side, right side price time match, but there was a Chapman wave overlapping wave. What exactly is that? In my CD, Introducing the Chapman Wave Methodology, it's a CD book available only at TFNN. There's a chapter that I call the overlapping wave, chapter 16, slide 317 and on. And that says when you go up to a B or a C, usually it's a C. If you pull back and take time, you can overlap that, and I'll discuss it when we get back.
Today, it's hard to tell if the economy is coming or going. Regardless, I want my money going in the direction I choose. If that's your stance as well, then you want to know how Everbank can help keep your money thriving just the way you want. Is growing your money a priority? Everbank is committed to a yield pledge promise to pay high yields on your checking, money market, and CD balances. Looking to diversify? Everbank ingeniously developed accessible ways to spread your money around the world into foreign currencies and even non-FDIC insured metals. And when it comes to your wealth, they bring a highly experienced and global perspective to help you manage it. Everbank's financial philosophy flies in the face of the status quo. They believe your money's performance should not be determined by today's economic circumstances, but by the drive to rise above them and create opportunities that favor your objectives. If that excites you, like it does me, call 1-855-750-4051 to find out what they can do for you. That's 1-855-750-4051. Call them today. Everbank is a member FDIC and equal housing lender.
Since 1984, Basil Chapman has been using the Chapman Wave methodology to advise traders of his expert market opinion. While originally hand-drawing charts from the late 1970s into the 1980s, Basil noticed that prices under most circumstances virtually always had a certain number of legs to the upside before declining sharply. Later, Basil found that computer software, which included the standard market technical indicators, enhanced the degree of accuracy in calling price turns as well as market trend calls. Thus was born the Chapman wave sequence. Using the Chapman wave methodology along with other indicators, Basil Chapman advises his subscribers of his expert market opinion each market day with his opening call newsletter. Right now, you can get a 2-week free trial to the opening call, Basil's daily trading newsletter, by visiting the front page of TFNN.com. Cancel at any time during that trial and pay absolutely nothing. Get your 2-week free trial to Basil's newsletter, The Opening Call, today by visiting TFNN.com.
Many of our new listeners have heard about the Tiger's Den, but wondered, what exactly is it? The Tiger's Den is a lively community where professional traders and investors can meet, exchange ideas and information in a comfortable, moderated atmosphere. Hear all of your favorite TFNN shows, plus see all the charts as they happen live during those shows, and have access to all those charts. You can test drive the Tiger's Den absolutely free for 30 days. It will greatly enrich your knowledge of these markets. Details on the Tiger's Den are on the front page of TFNN.com.
The Path of Least Resistance is David White's daily trading newsletter, and if you're looking for active trading ideas, then now's a perfect time for a 30-day free trial to this powerful daily trading advisory service. David uses his years of trading experience to offer his subscribers his trading ideas each morning in his Path of Least Resistance newsletter. Using a combination of equity trades along with options, David keeps his subscribers up to date with all pertinent market information with intraday afternoon updates when warranted. Don't miss out on this great chance to get a 30-day free trial to David's daily newsletter, The Path of Least Resistance, with no obligation to pay anything. David has been delivering solid recommendations for his subscribers recently, and if you'd like to see the type of newsletter he delivers every morning, then visit the front page of TFNN, and you'll find The Path of Least Resistance under Trading Newsletters. For all the details and to start your 30-day free trial today, log on to TFNN.com now.
With the launch of Tiger TV, TFNN has brought our programming to the next level. With Tiger TV, you can gain access to each host's charts and computer screens as they host their daily stock program. Whether it's Tom O'Brien, John Logan, Steve Rhodes, Basil Chapman, David White, Larry Pesavento, Andy Hecht, Thinkorswim, or Terrell Martin, you can catch all of our technicians hosting their programs live and archived on Tiger TV for your viewing pleasure 24 hours a day, 7 days a week. If you haven't checked out Tiger TV, then visit TFNN.com and see what you're missing. Basil takes your phone calls now. Toll free at 1-877-927-6648. Internationally at 727-445-1044.
All right, folks, we're back. Dow's up 258 to 17,971. That 18,000 level is going to be very important. To close above that, I'd have to say is fairly positive for the market. 2081 on the S&P. Now, in RAD, R-A-D, right aid, trading at 873, up 16 cents. What we're looking at is that there's a Chapman wave overlapping. This is what I call the overlapping wave to D. And what does that mean? It means in my CD, this chapter 16 it discusses this in great detail. And basically what it says is that at a certain point, very often you can get a pullback, and within that pullback, you can get another series of moves to the upside. And in that upside, it can happen at B, but very often it happens at C, the third highest peak. And what happens at that particular point, let me just change that, that has to be an up arrow. And what happens is there's a pullback that takes time. It does take price to a certain extent, especially when you got a low price stock going from the 848 level down to the 730. That's a big percentage, 722. That's a percentage. But really, it's a sideways move to the lower highs and lower lows, but it does not even come close to the low bar that started the buy signal. In this case, it would be the low of $6.68 on the 2nd of February. And then what happens within that context of the left side Grand Canyon steep cascading descent, that is looking at what the chasm that has to be climbed, that starts a peak A. I call it a gray A because it's underneath the last important high. Then you get gray B, still hasn't taken out that peak C that was made. And then you get a peak C. In this case, at 840 Rand, right, it made that peak C. And what happens is it pulls back. And then the moment it takes out 840, after at least one bar of rest, making a peak, that starts leg D in the new buy signal. I shouldn't have put that in the sorry. That should have been a plus sign. I was talking in the same time. That should be a plus sign. And that new buy signal to buy mode, going to leg D, then almost it invariably takes out the left side C and takes it out powerfully. In this case, it went from 848 to the high today of 883. I mean, that is almost 40 cents. That's 5% just in a day. That particular move, that is. So what I'm looking at here is not 5%. That is, yeah, almost, well, it's over 40 cents. Yeah. So, and when I'm looking at this, I'm saying good, because the rule of thumb is that when you take out peak C and you go to leg D and you do it with this combined, this is what I call the overlapping wave, when you get these two waves. Now, for those of you who know about the ocean, you know that when you've got one wave going along and then another wave overtakes it, comes above it, you would think that it would create a powerful force and the two together would just zip right along even further than the original one. No, no, no. What happens is, I'm not a scientist, I'm just saying, through my experience of watching the waves since I was a pumpchik, I was 3 or 4 years old. When you watch these waves, what happens is the slowness of the bottom wave drags the one on top. The one on top gets a tremendous momentum as it comes down over the other. And then all of a sudden it slows down. And it's exactly what happens very often with the Chapman wave, overlapping wave, leg D. Because you get this long D, and then it comes back and it retests the breakout, which would be 848. That's all it does. Makes a peak D, tests it, and if the technicals are still strong, it just continues ahead as if nothing had happened. It just needed a bit of a rest after such a powerful move. However, in the weekly chart, what have we got? We've got the same thing. It's like a macrocosm. You've got the left side. This is an exact plumb line to the low that was made on the 17th, the week of the 17th of October, 2014, from the 862 high of June of 2014. And then it takes an exact amount of time to get right toward, it just doesn't quite get there. It's 2 weeks early. It gets to 848, and then it pulls back. But it met all the requisites that we needed. Then it pulls back in leg B, makes a peak B, and then this week, last week and this week, it spirals above that previous high of 862, and that creates some other technique that I have, the Chapman wave cup and ladle breakout. And what does that say? It says that when you break out, you should go to at least a D, but you could even go to E and an F. So it's still very bullish, even though we might start to get a bit of a pullback over the next few days. I'll be right back. Basil Chapman, Tiger Technicians Hour. A little technical Friday there, but it is Monday, and we'll be right back.
Platinum, grains, crude oil, gold, copper, cattle, hogs, gasoline, natural gas, coffee, cotton, cocoa, and sugar. These are just some of the commodities mentioned in the most recent issue of Andy Hecht's Techno-Mental Commodity Report. Andy publishes his weekly newsletter every Thursday morning, where he breaks down the commodity market and provides his subscribers with specific trading recommendations based on his trading methodology. By signing up for a free trial to the Techno-Mental Commodity Report, you'll get a full 30 days to try out this powerful newsletter service and see for yourself the types of trades Andy has recommended for his subscribers. When you sign up for a 30-day free trial, you're under no obligation to pay anything. And should you decide to continue, you'll lock in the low rate of only $79 a month. Sign up right now for the Techno-Mental Commodity Report and make sure you're ready to catch the next big trade in commodities. For more information and to get started today, visit the front page of TFNN.com. Trade with confidence and clarity while using the software that thousands of institutional traders rely on to make the best and most accurate decisions. Choose from 1,000 equities, currencies, and futures instruments utilizing the TAS architecture. As seen on Bloomberg terminals worldwide, the TAS Profile Scanner is a benchmark technical filtering system that thousands of traders rely on, and now you can too. For a limited time for TFNN subscribers only, we've reduced the price to just $97. That's over 75% off. John Logan hosted a special subscriber-only webinar in December, and you'll gain access to that archive as well, so you can learn exactly what the TAS Profile Scanner can do for you. Try this product out. No matter what you trade, the TAS Profile Scanner can help you make more informed trading decisions. There's no obligation to pay anything. Don't let this offer pass you by. Get your 30-day free trial to the TAS Profile Scanner today by signing up at TFNN.com.
Daryl Martin coined the phrase diagnostic trading, and we're happy to announce that his diagnostic box spread analyzer has finally been released. The Diagnostic Box Spread Analyzer helps you easily identify the best box spreads on Nadex in seconds, plus you receive access to the diagnostic deviation levels, as well as step-by-step training videos teaching you how to trade Nadex spreads so you can quickly master the mechanics of this simple yet powerful trading instrument. By pulling live data from the Nadex exchange, the Diagnostic Box Spread Analyzer does all the math for you, calculating risk, reward potential, distance to break even for both outright spreads and spreads used to hedge the underlying market. Visit the front page of TFNN.com today to get your 2-week free trial to Daryl Martin's Diagnostic Box Spread Analyzer and gain access to the valuable information it can provide when trading the Nadex box spreads.
You know what's cool? Taking something that's good for you. Something specifically formulated to help with weight loss, better sleep, stress reduction, and the need to detox.
Nico, our hunter and gatherer ancestors found all their nutritional requirements for health in their wild environment. But today, our food sources no longer contain the vitamins, minerals, and nutrients our bodies need to stay healthy and strong.
That's why we need Primal Edge Daily Nutrition. It includes a special blend of ionic, soil-based vitamins, minerals, fatty, and amino acids in an easy-to-use liquid form.
Primal Edge is powered by highly concentrated fulvic and humic acids, nature's preferred delivery system. They have been called miracle molecules because, like sunlight, air, and water, life cannot exist without them.
That's right, Paige. They ensure we receive all the nutrition we need to be healthy and thrive. We take it every morning.
Primal Edge, formulated and approved by Nico and Paige of Living a Primal Lifestyle. Buy it today for just $89. Click on the Primal Edge banner on the front page of TFNN.com. This segment is brought to you by Think or Swim. For more information, just click the Think or Swim banner on the front page of TFNN.com.
So there's a sign there, right there at the bottom of CNBC Q1 growth outlook / So that does suggest that we're in a little mini recession. Interesting, isn't it? We'll see. So I had a question about BCLI. Never seen this before. Brainstorm Cell Therapeutics. Brainstorm Cell Therapeutics sounds like a bunch of MIT freshmen making up a name. Well, this has got consistently, so that's A, B, C, and goes down, C minus. So this is a very interesting. If you asked me just to look at this and didn't even tell me what the name was. In fact, I probably wouldn't have even looked at the name. I would have been so busy looking at the chart. I would have said to you, there's no question in my mind that this is a biotech company. Why? I hope this is something that you've got out of all these sessions that we have right here at TFNN as part of our education. It's when I say I mean mine as well. If you look at the pattern, the rhythm of biotech stocks, especially the little baby ones, is that they have these flurries of activity and then nothing. They look like they've been charged with a heart monitor. Whoop, electric pulse goes in, and then they fly to the upside, and then everything just fizzles down to normal again. Fizzles up, fizzle up. It's just constant, and there's a pattern. And what I like to look at is what is the pattern, because the pattern very often, if you look at the internals, if you look at the bookkeeping, you find that 2 directors got X number of stock, in payment of for whatever it is. So they use the stock very often as in lieu of actual cash to pay, or they use them as now announcements. I bet you'll find at this big spike up in the beginning of January, was it December? January, the week of the 2nd of January, so the end of December, beginning of January, there was this huge spike that goes from below 3, and in 3 weeks it goes to $8.47. Hey, 847 is exactly the number we're looking at in Rite Aid. So, and it does that in a split second. In 1 week, you just went from 368 to 847. That's typical of biotechs. And now we're actually starting to see them with takeover rumors and all that in other areas, even semiconductors. The Daily says this is a leg C. I probably could call it, it would be a little bit stretched, but I do that with very low price stocks or biotechs in particular, or IPOs that are just trading very lightly. I might have called that A, that B, that C, and that D, whatever it is. There's no way that I could give you a cogent analysis without saying there's a speculative side to this kind of biotech. You can see it in the chart. Once you miss the low bar for the start of a big move to the upside, your risk, not your profit, increases, because if it does move from here sharply, it's a great percentage gain. Nothing like it was. No, I shouldn't say risk, but your risk increases and the price performance might be good, but nothing like it is when it's just sitting dormant, sitting on the 200-period moving average at about 380 or 390. And all of a sudden it spirals. So if you're in it, I'm going to say congratulations, hold it. I think it's at this particular point, unless it takes that 437, that's 30 cents lower. Right now, it looks like it has one more spiral to the upside, then I would just clear out of this thing. But treat it like a wave. It just keeps going up and coming down, going up and coming. And you want to be thinking about this and try to time it with the news release. For instance, after this move, I wouldn't even be touching it again for about 3 to 5 weeks or 3 to 4 weeks. I'd wait for some kind of flurry. The moment the flurry starts, I'd grab it and say, okay, active, and I'd grab a little bit and I'd increase it as it moved higher, and I'd get out with it. I'd keep going in and out. If I had a core position because I believed in the company because of what they did, it's two separate things entirely. That says take a little bit of your portfolio, a 0.5% of your entire portfolio, 0.1% of your entire portfolio, stick it in there, and put a little chimer, put a little bell to say when it hits $11.80, wake me up, and then I might take some profits. And that's the only way you can do it. It just, you know what? What can I say? I don't even know what to tell you, because I don't. It's a very low price stock. It is a very low volume stock. This is where volume really does count, because they can manipulate like crazy. I don't want to say other than if you're in it, good. If you're not in it, at this particular point, I would buy the tiniest amount more as an experiment to see where it's going. Hope that helps. BCLI, Brainstorm Cell Therapeutics. Boy, what a name, huh? So now let's look at something else that I was asked about. Over the weekend, I got a couple of emails about, let me just state this again. As far as my Chapman Wave trend gauge is concerned, there are particular numbers that I look at. I spent years developing this, and I just found, I said to myself, you know what? You have so many techniques, a myriad, a slew of techniques that you give out, or your people can take your courses or whatever it is. You're quite willing to impart that as knowledge that people might benefit from. But maybe there are one or two techniques that you spend a lot of time on, and to just blurt out the number after all these years and just say, hey, if the trend goes to short-term trading index goes to whatever it is, it's telling you. I would try. I'm going to keep that as a black box. I'm just going to say if it's very low, you can expect certain things to happen. If it's very high, you can expect some things to happen based on the criteria that I give. And I'm just going to leave it at that. That'll be my own private one. it would be dumb for me just to blurt out numbers right now when I've taken so much time. That's number one. Number two is those numbers do change. You know, the VIX, for those of you who've been with me a long, long time, you know that I used to look at different numbers. I was waiting for the 20s to break for a long time. I had different parameters for the VIX index, what you can use every single day. Look at this, every single day. I state exactly what I'm looking at for the VIX index, how it can help you. Look, it's at 1451. I said over 1550s market slides, under 1470s sharp rally. You know, every single day I discuss this, and this is in leg C to the downside in the VIX index. There's my trend gauge. I always put numbers in it that are important, but the specific numbers, I'm just keeping it. If you have my service and you look at this long enough, you'll get to know more or less what I'm looking at. But I'm not going to make it specific because two things happen. One is, this is dumb on my part. I keep it proprietary. You spend enough time working on it, I think it's fine. The other is, I give you advice on it. No, this is part one. Part two of that is that I do discuss exactly what I think is going to happen, and that's important. Number three, well, actually, this is the second part. One was 1A, 1B, and this is the second part. Those numbers, I'm quite sure, later in the year, I might have to modify them. So if you're listening to numbers or even programming the numbers, you might have to change those numbers at some point. Let's go to Ben in Tallahassee, Florida. Ben, how are you?
Hey, Basil, how are you?
I'm good, thank you.
Great. Yeah, I'm in a real noisy area, and I apologize. The question I had was, if you already covered the GLD, then I'll just listen to the archive. But if you didn't, it'd be great to hear your thoughts if this is a good entry point.
Okay,
or
so
maybe,
now let's do this.
Swing trade.
Are you able to hear me a little bit?
Barely, but I'll just put you on mute so you don't hear
251
me.
leaving in 30 minutes.
Yeah, I'll just put you on. I can just put you on mute.
No, I don't mind your background noise. That's no problem with me. I just want to know if you could hear me. Okay.
Yeah,
so
I can.
let's do this. The GLD is 1/10 the price of spot gold. It is the Spider Gold Trust. It's trading at 113.68, down $1.38 right now. I'm looking at this and I'm saying we have a small gold position in the equivalent. And I need to check right now. No, we're not stopped out of it yet. We got the tiniest little stop on the particular position we have. And one of the reasons was I was looking at the dollar and I expected the dollar to make those lower highs and lower lows within a consolidation pattern, and then start to make this in the rectangle, try to rally and then fail. And that's kind of, I'm still looking at that. Within that context, my thinking was that gold could make that next arch in the weekly chart or even in the monthly chart and have a rally that took it to about the 116 and a half, 118 and a quarter area. That was kind of my upside target, and I thought that some of the gold stocks might benefit quite considerably if there is such a move. But two things are happening. One is that the move on Friday, when the dollar really didn't do very much, was very disappointing. Number two is the follow through that we got overnight into this morning, where gold is now down $16, down $1.34 in the GLD, says to me that the struggle to move to the upside might be even greater. And that two things are going on right now. One is that the commodities in general are in a deflationary I won't say spiral, because some are and some aren't in a spiral to the downside, but definitely the tide changed a while back, and that you're starting to see more deflation than inflation in the areas that are being monitored. Anybody who goes to a supermarket knows there's inflation and not deflation, but the gauge for the government is a little different. So what I'm looking at here is that gold is acting quite disappointingly in price. When I looked at the technicals of the daily, at one point, the technicals and the weekly were the ones that said to me, hey, there could be a nice bounce. And then the technicals and the daily followed. Now the daily technicals are actually holding well. The weekly, the GLD is not holding well. And the monthly chart is saying, hey, this is not what we expected. We wanted to be closer to 117 with the technical slightly improving. So this is very disappointing. So do you have any position at all in gold or gold stocks? Ben, if you're there.
Yeah,
Ben?
I'm sorry,
Yeah.
Basil.
Yeah.
No, I don't. I was just looking at it as you know, if you think in the last couple of weeks, it looks like a pretty good little rocket off the low from I think 110. I was looking at this as maybe just a little pullback.
Right,
for,
a little
for an entry.
pullback within the context of trying to make an arch formation in the weekly chart. And we're even going to a leg C, which would be above 115.84 in the daily. All I can say to you is, at this rate, I would probably say hold off a tad. You might miss the best entry price. But if there is a pullback in the dollar tomorrow, and gold actually is able to climb by Wednesday afternoon at about 2 o'clock, it's able to get, instead of 113.71, the GLD is able to get to 114. I would like to see 114.25 or higher. Then I'd say to you, you know what? You might want to nibble, take a small position. But I believe that there are other areas that are going to be more important. Now, here's the other aspect that's very important about gold. When I'm When I'm looking at different gold stocks, let's just take GG, which is Gold Core. It's a good stock to be looking at. That has not made a lower low, and that's kind of important. That's the reason why I was looking at RGLD. I was looking at some of these and saying individual stocks are probably a better way of playing any bounce in gold rather than the GLD. That's really what I'm looking at. Now, if you're looking at RGLD, which is Royal Gold, holding at the 200-period moving average in the weekly chart at 63.25, if by tomorrow afternoon or Wednesday morning it's taken out 62 as support, I don't really want any part. But in fact, if it's holding in at 64.50 to 64.75, that would be a good sign. Or let's just take a smaller gold. I don't even know if I've looked at it lately. Let's just look at AUY. No, that's not a good one. Let's look at AU. No, I would actually. Yeah. I know that you don't get the same bang for the buck, but if you want to play it for at least a bounce, I would rather go for the best looking gold stocks, even if you have to pay a much higher, get a smaller amount, than to go for the little ones that can have a pretty big percentage pullback, even though it's only 30 cents or 50 cents. I'd rather go for the golds that are acting really well, and like a gold core or an ASA is acting okay, but I would not. I'm hesitant to have you gamble. I'd rather look at a stronger looking stock that can participate in a good bounce in gold. That's really my issue.
Yeah, Basil, I guess a lot of it has to do with the dollar. I was assuming this was a little bounce, kind of like the market, and then the dollar would come back down. But maybe it's not. Maybe that's the wrong assessment.
I think that the euro is really the issue, and the euro is showing the kind of weakness that in the weekly chart and monthly chart that makes me kind of worried about the euro. I think the euro, boy, it better get going very soon, and that's impacting. I don't know whether the dollar's impacting the euro is impacting the dollar, but the dollar should have gone underneath 96 by now, and it hasn't. That's really the issue. So I'm saying to you, I would prefer to step aside from gold just at the moment. I'm not seeing anything that says sustainability just because of the depth of the pullback. Even though it's only 2 days, it should not have been quite this deep. Day is young. We could still close better on gold. I don't know. I'm just looking at it and I'm saying, wow, strength of the dollar is leg C up in the 120-minute chart. Says it could still go a little higher today. So maybe tomorrow will be a very important session.
Yeah, great.
You take a hands-on approach to managing your investments. And whether you're bullish or bearish on U.S. Treasuries, the ETFs from Direction Shares are there to help you magnify your perspective. Bull ETFs for a rising market and bear ETFs for a falling market. Direction Shares gives you the tools for both sides of the trade. Discover how we can help at DirectionShares.com today. An investor should consider the investment objectives, risks, charges, and expenses of the Direction Shares carefully before investing. The prospectus and summary summary prospectus contain this and other information about Direction Shares. To obtain a prospectus or summary prospectus, please contact Direction Shares at 800-851-0511. The prospectus or summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors employing dynamic strategies. Investors in the fund should understand the consequences of seeking daily investment results, understand the risk of shorting, and intend to actively monitor and manage their investments. Distributor Foreside Fund Services, LLC.
We're told to follow our passion and everything else will fall into place. I hope that's what each of you are doing each and every day. Hi, I'm Steve Rhodes, host of the Money Master Show at TFNN.com, and my passion for technical analysis is what led me to the most fundamental discovery in pattern recognition, the Rhodes Momentum Indicator, market scanner, and trading strategy. A set of tools that identify the momentum and power of the trend, the likes of which have never been seen before, for every market and every time frame. Yes, folks, the trend is your friend, unless you're on the other side. New to technical analysis? This is the place to start. And experienced traders take advantage of the trend like never before. Experience the power of the Rhodes Momentum Indicator each day, available to subscribers of my newsletter service, Mastering Probability. I guarantee your satisfaction for the next 30 days unconditionally, so there's no risk to you other than being on the wrong side of the trend. Mastering Probability, available on the homepage of TFNN.com. And folks, live with passion.
In quiet markets, investors search for new trading opportunities. We'd like to introduce you to a new product that provides opportunities even in flat markets. Nadex, the North American Derivatives Exchange, is a new and innovative Chicago-based exchange registered with the Commodity Futures Trading Commission, and unlike most other exchanges, Nadex allows you to trade directly through them with direct market access when using their trading platform. Nadex never charges a fee to use their platform, which even includes real-time charts and full customization capability. Nadex's unique short-term binary options allow traders and investors to capitalize on strategies even when the underlying markets are quiet. Nadex's innovation has allowed them to come up with a line of unique trading products that are unavailable anywhere else. See how it works at nadex.com. That's NADEX.com, or click on the Nadex banner on the front page of TFNN.com. Futures and options trading involves risk and may not be appropriate for all investors. TFNN is excited about our new software charting program, The Art of Timing the Trade Charts. In collaboration with Tom O'Brien and using his best-selling book, The Art of Timing the Trade, Your Ultimate Trading Mastery System, David White has programmed an outstanding piece of software that will complement any trader's methodology. Using this first-of-its-kind program, The Art of Timing the Trade Charts allows you to scan thousands of stocks for Fibonacci formation setups, including Gartley's, ABC's, butterflies, and much more. The Art of Timing the Trade Charts is designed to help you when scouring the markets for stocks just beginning to form the trading patterns that many investors spend days, weeks, or even months searching to find. And right now, we're offering licenses available at only $79 a month. We are so confident that you're going to love this new charting software that will even give you a 30-day unconditional money-back guarantee. Don't miss out on this incredible new piece of software. Get your copy of The Art of Timing the Trade Charts today by visiting TFNN.com.
Catch Larry Pesavento, a 40-year veteran trader. He uses pattern recognition, Gartley's, butterflies, ABCs, and Fibonacci in order to trade these markets. Trade what you see. Next on TFNN.
Folks, we're back. Just real quickly, I didn't answer all the questions that were on BCLI. BCLI was that Brainstorm Cell Therapeutics, trading at 468, up 14 cents. This is leg C. I'm calling it for now, at least leg C in the daily chart. The question was, would I be a buyer? And the answer is, the person who asked the question, I know, has had a lot of experience with these things. And I'd say, I would probably say that if it dipped to 458, between 458 and 456 and kind of held there, didn't go to that level and keep spiraling down to 443 or something, just it kind of held there, I'd say I'd nibble on it and I'd wait for that leg D. That's the only way I would do it, since you've got experience in it. If anybody else is in it, that's fine. I've discussed that. But the other question was, what was that spiral? Why isn't that a brand new leg A? After all, you went to a D previous, and the answer is very simple. That peak D was met with selling, and it came down exactly with the stochastic and the MACD. And that spiral to the upside looked like one of those single leg A minuses that I get. But in fact, because it started above the previous low of that started the buy signal for peak ABCD, I can just call it a continuation pattern of the other. It makes no difference. All that's most important is that right now we're in a sub buy signal, not yet a buy mode, but a sub buy signal in the weekly chart and leg B. And it's saying that 435 is absolutely important as support, and that there's a good chance it could just have a little bit more of a pop to the upside, but a bulk of the explosive move, I think, has already been done in the stock. I'd probably say, hey, time to move on. Too much risk rather than reward that I can see if it breaks under 443. All right, answer that question. Now, XLF. Let me just give you a brief synopsis, since this is the beginning of the week, of what I'm looking at. I think we've got maybe another day of rally tomorrow, and then Wednesday is the real test, the start of April. Why? And I'll explain. This is going to be look at the XLF. It's just in a trading band. It's not doing all that much. I'm kind of tired of getting in and out of this XLF. Probably every time it drops very sharply to the 23 to 22 area, maybe that's the time to build up a position in it and just sit there saying, hey, if there's another major move to the upside in the market at some point in the summer or whenever, I want to be in it, and XLF is probably going to participate. But when I'm looking at the general market, let me just go through a couple of things. If you're looking at the QQQ series, they were helped a little bit with the Intel and as the SMHs, the semiconductor ETF was on Friday, with that sudden spiral when Intel announced the Altera link right there. Just boom, they both went up. But I'm thinking that it's going to be a real struggle for the QQQ series unless there's a powerful move tomorrow as well into Wednesday. And that would say, hey, now we can start building momentum to the upside. The technicals and so much of what I did, especially over the weekend, I went through so many different charts, so many charts within the sectors. I think that the upside is kind of limited. That's what I'm looking at right now. And that doesn't say that, oh, that means you're going to go way to the downside. No, I think that there's a chance now that this consolidation is unfolding. It's a rotational consolidation. And that what we're really looking at is in the Dow, where sometimes it leads and sometimes it follows. The Dow is saying, I'm holding that uptrend, that inside track support level in the weekly chart. If at any point this week we start to fail and Friday closes below 17,800, and right now we're at 17,977, that's going to say, uh-oh, a lot of work's going to have to be done to be able to break out to the upside. More likely we're in a lower highs and lower lows pattern just for now, and that's going to be a consolidation. And I'm watching certain sectors, as my subscribers know. This is just a very interesting period, selective period, and I think that it's a very fine time to put in specific stocks on the short side and the long side. Hey, stay tuned for Larry Pesvento. Check my opening call.
Tom O'Brien's weekly gold letter, The Gold Report, gives complete and concise coverage of the entire gold market. Inside, you'll get Tom's commentary on gold, the dollar, the rand, the bond, the XAU, the HUI, and detailed coverage of nearly 25 mining stocks. He'll give you the entry price, price target, and stop price of each stock trade. The Gold Report is a long-term newsletter where the focus is on building real wealth through the management of a successful portfolio of gold stocks. With a lifetime of knowledge and almost 12 years of writing his informative weekly newsletter, The Gold Report, Tom O'Brien can provide you with the important market information to help you make better trades in the gold market. Don't let the next bull run in gold pass you by. To get a month-long free trial to The Gold Report, an $85 value, visit the front page of TFNN.com today.
This is TFNN.